because I promised to send out the recording to people. So anyway, thanks so much for jumping on. And there's been kind of a surprise. I mean, I think that, and I want to kind of make this more interactive, so feel free to interrupt me at any time if you have a question. I did get a few questions about some things, but let me just talk a little bit about what I'm seeing in the marketplace. There's a lot of bad news in the press about what's going to happen to the economy, and I'm sure that nobody really knows what's going to happen, right? But I mean, it seems pretty obvious that we're headed for a very severe downturn one way or the other. Whether it's going to be at a par with the Great Depression or not, I guess remains to be seen. But I'm seeing a real bifurcation in the market, and it's a trend that's been ongoing for a while, actually, not just because of the pandemic, but the pandemic just seems to be highlighting it. And that is, there's people who are incredibly busy, busier than they've ever been right now. And I think it kind of gears more towards white collar work. I'm not sure 100%. I mean, because obviously couriers and those folks are incredibly busy right now. The Amazon drivers and whatnot are incredibly busy. So it's not 100% white collar, but obviously office workers and IT people are busier than they've ever been. So, and then there's all of the restaurant and hospitality people who are, kind of the bottom of our economy, really, and struggling. So it's going to be interesting. It seems like we're just going from a more and more of a divide in our economics stratas. But what's interesting is with the record low interest rates, there's just a lot of activity going on. So people who aren't worried about their jobs, they're not worried about their jobs, obviously. And they're going to take advantage of these interest rates. So this is a chart that we can pull up on the Compass platform. Oh, wait a minute. Can you guys see my screen? No. Okay, hold on a minute. Here we go. Okay. Okay, now you can see my screen, right?
Yes.
Okay, good, thanks. So this is a chart that we pull up. We can go back 24 hours. We can go back 3 days. You can see here, 7 days, 30 days. And this is showing, this is everything, these are residential properties only, that everything in our MLS currently active. There's about 27,000 properties currently active. There's, in the last 24 hours, 278 new listings have come on the market. This is interesting. 21 have reduced their price, which you would expect, but 4 have increased their price. And anyway, of the new listings, the 278 new listings, there's also, okay, there aren't any contracts because that would have been, Sunday, but 87 have gone have gone pending. Oh, no, wait, here we go, contingent. 278 new listings, 319 under contract, plus this 87. The difference between contingent and pending is contingent is when they first go under contract, and pending is when they've gone through their due diligence period. Okay. So if we combine these two, that's almost 400 properties. That's more properties have gone under contract than have come on the market in the last 24 hours. In the last 7 days, the last week, again, we've got almost 25,000 properties currently on the market, 3,700 new listings. Here we go again with the price increases. I'm trying to figure out what people are thinking with that price increase thing. I have to call some of those folks and ask them, what are you thinking? Anyway, of the 3,700 that are new, 3,000 have gone under, have 2,900 and 8,800. So that's what, like 3,800, something like that. So there's more properties have gone under contract than have come on the market. This is some other information that we have access to It shows what's going on. These are closed listings. And you can see we started out, this is from the MLS. This is our MLS system. And you can see that we've started out the year with a bang. And then here's when the shelter in place order hit. But, you know, things have calmed down a little bit. But, you know, deals are still closing. And here we can see the under contract. So the green bar is 2019 and the blue bar is 2020. And we can scroll and look at some of the hard numbers here. But again, this is the COVID when the shelter in place orders went into effect. Things went under contract. But look at this bar graph, it's starting to increase. And there was something else I wanted to show you here too. Really interesting. I find this stuff to be really interesting. Well, here's, where did it go? And let me just do it this way. Okay, here are the new listings. So you can see we're definitely down from 2019. I mean, obviously, but still, it seems like people are like, okay, you know what? Here, this is an entire MLS. So it's like all of Northern Illinois. Our MLS covers all of Northern Illinois, essentially. These are, oh, somebody had asked me about rentals. Is now a good time to rent? Should they rent their place out rather than sell? And I think that rentals seem to be down. They're going down. I think people are feeling like they want to, you know, have control over their destiny, and particularly with the interest rates. I mean, right now a 30-year fixed rate is right about like 3 1/8, maybe. This is an interesting slide. It shows how many people pulled their properties off the market temporarily. So they were active on the market. They've temporarily gone off market. This is when the shelter in place order came in. You can see we were 2,500 the week that we started the shelter in place. So that's just normal, you know, pre whatever, people changing their mind. And then the following week it went up to 5,000. So it almost doubled. But people are coming back on. I mean, it's still pretty high. 52, 54. A lot of people are pulling they don't want, you know, people in their homes, so they're pulling their properties off the market. These are open houses. This shows, again, here we are, the shelter in place order. But, and you're wondering, how are people doing open houses? Well, we're doing them virtually. Agents are walking through with their phones, like doing FaceTime kind of walkthroughs with people, or they're just doing it online. They're not going into the property at all. They're just, we're doing a lot more 3D videos and whatnot, virtual tours. And now this is the other thing that I find really interesting. The blue line is 2019, and the gold line is 2020. So here we are at the beginning of the year. This is January. These are the showings. You can tell when we had the polar vortex last winter, when things dropped. And here is right before the shelter in place. You could see we were off to a nice brisk spring market, very active spring market, and then boom. But look at this, we're up 30% from last week, because this is showing it every day. Oh, no, from the beginning of the year. So here we are at 0. 0 is beginning of the year. And here our showings are up 30% from the beginning of the year, but still down from last year, from the peak. We're still down 17%, obviously. But it's a pretty interesting bar graph, I think. So that was kind of what I wanted to share with you, that there's lot of activity going on. If you're thinking about selling, things that we're doing are 3D virtual tours. If we don't want anybody into the property, photographers actually can send a drone through. We're only supposed to really show vacant properties, and if it's a tenant occupied property, we're not even really supposed to be showing it, but you know, we're kind of working with tenants on that. Well, what I'm doing is working with tenants and asking them to be out and only sending 1 or 2 people through. We're limited to having no more than 4 people go through at a property at a time, even in a vacant property. Showings have to be limited to no more than 4 people. But so what I've been doing is I meet people at the property if they want gloves or a mask. I've got those available. I hand those to them and I open the door. I get there early, open the door, turn on the lights, open the closet door so they don't really have to touch anything. And then I hand them gloves and a mask and let them go through. So so that's kind of what I'm doing. So let me see, I had some questions here. Are buyers expecting owners to sell low? Actually, I think that there's just not enough inventory for that to happen. Yeah, buyers obviously would love to have owners sell low, but you know, buyers always are looking for a great deal, but that's not always available to them, sadly. There's just not enough inventory. I think what's going to happen is that our market is going to see investors picking up deals, because investors have been starved out for quite some time. There hasn't been enough inventory for investors. So I think they're gonna pick up the bottom of the market. They're going to be coming out in droves. And then you've got the other end of the market, the 500,000, 750,000 and above buyer, who's not worried about losing their job. They've got job security and are taking advantage of market conditions. Given all the uncertainty, would it be better to rent now and sell next year? Well, who knows what's going to happen next year, but I think, oh, that was the other thing. Did I show you that slide? Where did I have that slide about pricing? Prices are actually up over 20. Where did I have that slide? I'm sorry, guys. But yeah, price. Oh, I know where it was. Hold on a minute. I got to go someplace else to show that to you. But prices are actually up over last year. So I don't think it's a bad time to, okay, let me share my screen with you again here. Here we go. I'm going to get into our MLS and I'm going to show you this because I think it's really interesting. Here we go. Uh-oh, I'm having problems here. Okay, I guess I'm not going to be able to show it. I'm sorry. But anyway, let me just quick pull this up. I'm sorry, this isn't. I think Zoom has been having some problems lately. They probably are scrambling. You know, these IT people, they're all scrambling because of, there's been so much more demand on their services and they're scrambling to keep up. So, okay, here, let me see if I can get you guys, share this with you. Here we go. Okay, so this is the entire MLS. This is all price ranges, all property. Oh, these are single family. So both condos and single family townhouses, condos, etc. But look at here. This is 2017. This is a median sales price, and it's gone from, what was this, 210. The entire MLS area is up 3%. If I go back the last 12 months, let's see. Okay, I mean, so this is January. This is the entire MLS. You can see that the price was 220. 225, 245. I think this is showing this bifurcation that I'm sharing with you. Just really, let's just look at detached. 20. So this was last year's spring market. Our peak was in June. Here's our polar vortex last year. 250. We're up to 265 over last April was 250. This April we're at 265. So to answer the question, should you wait? Who knows? Probably not. It's probably better to get your property on the market. So, all right, let me stop sharing this. See if anybody else has any other questions, any other thoughts you want to share. If you want to mute yourselves, join the conversation.
Mary?
Yeah.
Celeste Hammond here.
Hi.
And I'm not expecting it to be here, but have you heard anything about buyer preferences for the suburbs versus the city?
Well, yes.
An article on that yesterday.
Well, I'm hearing that. I mean, yes. I mean, people definitely want more open space. They want outdoor space. I know that a lot of these one-bedroom condo people, you know, who have been one-bedroom rentals or one-bedroom studios, whatever, you know, they've been sheltered in place. They've got cabin fever. They definitely are looking for more space. And for outdoor space, even in apartment buildings downtown, outdoor space is definitely, I mean, that's always been true, but it's even more so true now. And I think there is a trend of moving to the suburbs. I mean, I think people who were thinking they were going to move to the suburbs anyway, will probably make that decision sooner rather than later. And those are people, you know, newly formed families who are expecting to have kids and worried about schools and all that stuff. So, yeah, I mean, I think we're definitely, but you know, I think there's people like myself who are committed to the city who, you know, I did the suburbs for a couple of years and it's not me, man.
Me neither.
So anyway, anything else? Anybody else? Any thoughts, comments, feedback? Yeah, go ahead, Nancy. Hi.
I am, since I can look at Lake Michigan, I am very aware of erosion along the lakeshore.
Right.
Have you had any comments or withdrawals of interest in properties that back up against the lake?
Well, I've seen some articles about it. I know that there was an article in the Tribune maybe 2-3 weeks ago about the erosion issue. And, you know, I'm living on the lake now too, Nancy, so I'm much more aware of it than I ever used to be. But it seems like, and people in these condo associations are plowing a lot of money into both reinforcing their waterfront and you know, building up their reserves so that they can do that should the need become necessary. But it seems like there's something about our beautiful Lake Michigan. People want to be there. They love to look out on it. They're willing to pay. They're willing to pay the price for it. Yeah. That's
not necessarily the big point. The big point is that back in the 80s and 90s, there was an awareness that with waves going more than 20 feet high and erosion really beginning, at least for that era, that revetments were a good counter to the waves taking away shoreline. Excuse me. Mm-hmm. There have been several attempts to put in revetments, most of them on the far north side. Mm-hmm. They have been successful. Mm-hmm. heard anything about any proposed activity from the Army Corps of Engineers, which apparently would be the supervising entity that will see to either revetments or something else along the lake shore.
I have not, Nancy. I haven't been following that closely. But
Okay.
yeah, I haven't been following it that closely. I mean, I know that there's people that are heavily, my brother actually is worked for the Army Corps of Engineer for many years. He's retired now, but yeah, you're right. I think that would be the entity that would do some sort of a federal something or another, but I haven't been following that.
Okay, thank you.
I mean, I think if anything, I think what'll end up happening is that these condo associations are going to get hit with higher assessments, and that'll have an impact on obviously saleability, because as assessments get higher to deal with the issue, it's going to bring prices down, and buyers will be nervous about buying into an association with such high assessments. It's just a fact of life. So I think that's how it'll be reflected more than anything. It'll have the impact on assessments.
Okay, thank you.
Sure, you're welcome. Anything else? Joe, are you good? Okay, good. Well, anyway.
Good, Mary. I just wondered, I think you answered my questions already. If it's a buyer's market or a seller's market. I have a friend who's in the market right now in the suburbs, and he's just trying to figure out what to do. And so
yeah,
kind of useful information to transfer on to him.
Good.
I
Well,
appreciate it. Yeah.
Sure. Yeah. I mean, if you'd like to call and pick my brain, I'm happy to share it with. I can drill those numbers down to a specific. If he's looking at a particular, city or municipality, I can certainly drill those numbers down for him too.
Yeah, he's actually gone to contract on a couple properties and then backed away after discovering some things that just weren't favorable for a long-term hold for things. So he's a little, on the fence, wishy-washy.
Okay. Well, aren't we all? I mean, it's like we're all trying to figure out what the hell, what's going to happen in the next 30 to 90 days, right? So definitely. But anyway, well, good. Well, I hope you guys found the information valuable. And
another question, Mary, that Joe brings up. How are they doing the home inspections?
Well, basically the home inspectors are going in, we're vacating the property, and the home inspectors go in and do their thing. I mean, they're gloved up and masked up, and some inspectors aren't comfortable and they're not doing them, but most inspectors, the guys that I go to, they're doing them. They're busier than ever, actually. They're really busy because you can see all of the properties going under contract. I
just wondered, with Joe's question,
Yeah. So.
Thank you. I'm sorry.
Yeah, good. Oh, no, not at all. Not at all. I'm glad we had the chance to chat. So,
great.
All right, everybody. Well, I want to honor your time. Have a great day, and we'll see if we do this again. I don't know. If you think it's valuable, let me know, and maybe I'll do this again soon.
I do. Thanks a lot, Mary.
All right, good. Thanks so much, guys. Have a great day.
Great.
All right,
Thanks.
bye-bye.
Yep. Bye-bye.